Ohio, namaste, salam, my good friend. Yo, 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 yo. Good to see everybody. Thank you for attending today's event. We have coffee and donuts at the back. Help yourself. There's a few seats open at the front. Welcome to today's Forex trading strategy session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. You may also know me as the founder of FX Bootcamp. Hoo-ha! So we do these events every day. Well, on Fridays, I'm here at FX Street. And Monday through Thursday, I am at TradersWay.com. And from 7:30 in the morning, Wall Street time, which is approximately London lunch, we go through the charts and the fund, the charts and the calendars, do some trader talk, tap dancing, all that kind of stuff. So you're welcome to join us. It's always free, and I have nothing to sell you. I don't have a product. I don't have a service. There's nothing but this. That's it. So I'm glad you're here. Thank you very much. I appreciate it. I know your time's valuable. What currency pairs are most on your mind at the moment? How can I help you? What's your problem with pig? Yeah, USD kitty CAD. It's broken out. Yeah. 1,000 pip pig trade on its way. You're probably pretty late. You might be a week late on that one. Yep. But whatever. We'll go over that. Anything else? Yeah, that's what Wyatt's saying. Yeah, you should be about halfway there by now. So, over the last couple of weeks, people have told me they got into their first 500 pip trade. I think someone had 400. There's a few people at 250 to 300. Any other big trades going on that you guys are happy to report? Sure, Denise, we can go over Kiwi Yen. Yep, I'm happy to do that. Anybody else get some big trades going? I love to start with good stories. I guess not. Oh, no. We're doomed. Oh, well, it's over. It's all over but the crying. Oh, well, how about who would like to continue to work on our success then? Yeah, boy. Okay. Any horror stories to report? Did anyone just have like a horrid day recently? Sort of an SNB light? Any central bankers come up to you and lie to you in your face? No? Wow. You guys are just plain vanilla, huh? All right. All right, cool. So, well, let's get going then. Remember, you're the boss. I am a simple, humble currency coach and trader. So you just let me know. Yeah, sugar-free SNB. Yuck. Sugar-free, caffeine-free. 3 of ethics and truth, too, huh? All right, so we had a lot of requests for the pig dog, so let's go through British pound USD. And you can see that we talked about this earlier, that we had a prevailing downtrend that had bottomed out. Check this out. On the 14th. And for, I think, about 8 weeks, we talked about the middle of April, right? The middle of April, the British pound could, maybe, perhaps, plausibly might go from bearish to bullish. Can anybody confirm that? Not 1 week ahead or 2 weeks ahead or 3 weeks ahead or 4 weeks ahead, but like 5 or 6 or 7 or 8 weeks ahead on probably 6 or 7 or 8 different occasions. We talked about the middle of this week, the British pound maybe potentially going from bearish to bullish. Let's see, 1, 2, 3. 3 people. All right, well. Okay. Yeah, well, Alan's got it, the IMF report. Glenn can confirm it too. All right, and Alan's very specific about it. Yeah, we're not sure what's in the report when we're talking about it. It just came down to whether it was going to be a horrible report or a hopeful report. Yep, Jim's confirming too. All right, so we got, like 15 to 20% of the people confirming. All right, good. So it was on your radar screen. You know it was coming. Well, this is the 14th. Does that qualify for middle of month? That the low was on the afternoon of the 14th? And yeah, close enough, right? All right, so that's cool, and it's true. It was based on the IMF report. Fine, okay. The other thing that you see here, so you have price action coming down, lower low, lower high, lower low, lower high, lower low, 100% pullback. Hoo-ha! You guys have like alarms that go off, like does a marching band march through your office? Ding, 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 ding. Ding, ding, ding. Like, all of a sudden you got this 100% retracement. Forget about the IMF stuff. Forget about, the guess, the logical, intelligent guess. But just the fact that you're in a solid trend and all of a sudden you get 100% retracement. Do like bells and whistles go off? Is it kind of stuff? Ding, 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 100% pullback, 100% pullback. Because it should. So this is what we did at our strategy session. Was it this week or last week? I guess on the 15th. So yeah, a few days ago. We actually, before it happened, and I'm sure we can get just as many people to confirm that. Before it happened, we set up a head and shoulders. Okay? And we did that, kind of in here the next day. We were kind of in this area. And so I guessed based on this low and here, and it's a fib and blah, 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 blah. I drew a neckline off of this shoulder to this shoulder. And then we measured the distance from the neckline to the crown. And then I did that with this orange line. And then I moved the orange line to what we thought was the neckline, moved it up here, and projected that the British pound would be right where we are right now. Hoo! Snap! Lucky on the fundies, lucky on the technicals. Cool, huh? Does everyone follow everything that went into that? Because it's not meant to be hocus pocus or amazing. It's not supposed to be like, oh my God, Wayne's like the best trader in the whole world. No, I'm not. So I'd rather go over the logic. I'd rather go, because it really, all of this was intellectual. It wasn't smoke and mirrors. It wasn't a giant guess. We talked about it multiple occasions intellectually based on, probabilities and possibilities and stuff. But this is technical and fundamental analysis. So if everyone gets it, we'll just move on. If you have some questions, let's go over it now. Yeah, a lot of people are still selling. Yeah. Well, I hope you cited me in your post. You just got to, you know what? So I like that, YJ. So you just took 350 pips on the off the weekly M4. That's cool because I like that. It's a logical, intelligent area to take profit. It's a plan. Like, it's one of these things, right? Like, there's no argument. Imagine two lawyers arguing a case. Now, in many cases, law is an interesting career because, both sides could be right and both sides can be wrong to whatever degree, and they have to hash it out through negotiations and through trial and stuff, right? Like, who owns the right on the swiping technology on a cell phone? Did Apple create that? Can Samsung use it? And so they have to argue their case of legal precedent and intellectual property rights and stuff, right? And so if two traders now were arguing over what the right thing to do was, if someone said, I took profit at the weekly M4, there's not much to argue against that. That's the weekly reversal pivot, and if you had profit and you're like, you know what, I decided to take profit there because it was a logical area where my risk would increase, and I wanted to take the profits and give myself dry powder for Monday. I mean, what could you say negative about that? Oh, no, you should leave the risk on, right? Like, so, hey, man, good job, YJ. Yep, very nice. Okay, so let's move on to the next one, right? Well, let's back out. Is there anything else going on the piggy? And we're just kind of at this area here. Right? By the way, one of the FX Street members sent me an email through FX Street, and they're like, "Hey, Wayne, I notice how you always go insert shapes, rectangle when you draw." And he's like, "You know what? You can add it to your bar, and it'll save you a few seconds." You know what? I'm like, as simple as that was good feedback. So if that person's in the room, thank you very much. Stand up and take a bow. Appreciate it. So yeah, added it to the toolbar. Smart. Yeah. Wyatt almost gets. It's funny. I almost invented the mobile phone. Yeah, actually, one of my funny stories is when I was a venture capitalist, I was sent to Korea to consult with high-tech startups many years ago by the South Korean government. And so I did a big speech in front of all these CEOs, and that was really fun and all that kind of stuff. And then I met with a startup that put a video screen on a cell phone and a camera on a cell phone. And I thought it was a dumb idea. Don't. Yeah, I got that one wrong. Yeah, oh, this was a long time ago. It was funny, though, because the refresh rate was so slow that when you watched a video, it was like, every 2 seconds you'd get a new frame. I mean, they just didn't, the technology wasn't right. They took pictures and the pictures came out, a hundredth of a megapixel, right? So it just kind of looked like Minecraft screenshots, right? So the technology was pretty primitive, right? But anyways, I thought, you know what? That's a dumb idea. Of course, when the technology was ready, then it was really good. Yeah, they were. But I swear to you, that's what I said. No, man, that was a dumb idea. Forget it. We don't want to invest. So, anyways, But South Korea, great country to visit, man. Good people. All right. So now we're up here, right? And would you call that a higher high yet? See, I wouldn't. What I'm looking at is we made our big pullback to our logical area, and we're now at the 4-hour 200 EMA, which is what? What does that represent to me? If you've attended the 2-hour workshop that's on FX Street, if you've read my book, if you've just hung out with me, you know what that represents. It represents the fair market value. Muy bien. So, is it bullish or bearish? Well, it's neither, in my humble opinion. Not on this time frame. So you got a couple of things going on here. Change the time frame, and it says up, but only up to the next gray zone that I just finished drawing. Do you guys see it? That little gray zone here I just drew. And you notice the daily 55 is there? What does that tell me? Oh, my book, Strategic and Tactical Forex Trading. It was a top 10 Forex book on Amazon for about 5 years. It was the #1 bestseller on Amazon under Forex 2 weeks before it was available for purchase. So, thank you. I made nothing on it, money. Wow, I earned money, but I spent more money on the launch party than I did receiving royalties. Yeah, but you know what? It was a great. If you've ever bought beer and wine for 3,000 people, let me tell you, it gets expensive, especially when you have custom-made camouflage cups. But anyway, so we're in here now. Okay, we're in here, and the 55. What it tells us, or what it suggests, is that price will come into this 55 zone. And then it's going to come down and double bottom. Okay. Now, it could do one of these things and go this way, and you're saying, Wayne, it told you double bottom. Well, what I'm really suggesting is no lower low. Okay? No lower low. That it could come down, make a 50% retracement. But, generally, I keep my eyes open for a double bottom. Same thing in reverse. If the 55 is a support, you're probably going to get like one of these things. So that's what it's suggesting, and that's somewhat congruent with our 4-hour thought that even if it goes a little higher, that we're kind of in a zone for this to start to happen, right? Now, to change the direction on the daily, we're going to need several days worth of price action, maybe like a week or something. So that suggests on the 4-hour that we're going to have multiple cycles like this. Okay, and start to create on the 4-hour a series of higher low. Let's see. Lower low compared to this one, and then higher low, and then lower high, lower low. So I'm not saying it will happen, but you should be ready for a medium-term change of trend. So why it's like spot traded down? Well, you can do whatever you want with the knowledge. Okay. You could, you can put little scalps in here and here, or you could wait. Let's say now on a 15-minute chart, you wait for it to go a little higher, and then you look for like a 1, 2, 3 scenario, and then you start trading, or you wait for 5-8 crosses, 21-55 crosses. I don't know, whatever your thing is, they're all going to be reasonably the same. I just encourage you not to guess. Don't just throw down a bet because we're here. But if we're here, then what you should do is, look for what I say, in your mind's eye, envision, just mentally envision what a reversal would look like in this area where you think there might be a reversal pattern. So you could repeat a scenario like this, where it went up and it double topped and then dropped. Somewhere in here, you should have been hardcore short. And then in here, you should have recognized, if you thought this was a reversal zone, 175.0000. And then you would say to yourself, well, I wonder in that psych area if we'll get a reversal pattern. Well, somewhere in here, even on the 4-hour, but you can go on even smaller time frames. I mean, just imagine what the 15-minute chart looks like. There's just huge bullish engulfing candles. Like somewhere in there, you should have said, "Gag Zeus." It's reversing. Right? And then if you missed this one, you should at least do what we did and say, it's probably going to make a higher low off previous support for a 1, 2, 3 reversal pattern and be long here. And then if that's the case, that'll create a head and shoulders pattern. Therefore, my projection should be up here and blah, 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 blah. Blah, 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 blah. Okay. Now, another interesting thing about moving averages is that they lag. So this thing could come down now, even though we're not touching the 21. Okay? But if you are a hunter and you're hungry and you like to eat deer, okay? You got to shoot the deer to eat it, right? Ideally. What if the deer is running this way and you take dead aim at the deer? Okay? What happens? You miss. Why? Yeah, because by the time the bullet gets there, right, the deer's gone. You have to shoot. You need to be aiming here for Mr. Deer, and the two converge. This is very true with moving averages, and I'm amazed at how poorly amateur traders use moving averages, because they look at them after the fact and say, "Oh man, I should have bought here. Oh man, I should have did that." But the reason you didn't do it is those moving averages weren't there then. What about the Coriolis effect, Alan? And well, gravity is constant, so I suppose that's the same. Yeah. Ooh. Oh, Alan. You know what? I asked that of a good friend of mine that's a sniper, David Pegler, and he's like, "Oh, the U.S. Army didn't teach me that." I'm like, I learned that from Call of Duty. Well, better training than the U.S. Army. I don't know about that, but yeah. No, I'm not sure what it means, but it stumps people, so that's good. Sounds smart, anyways. So, anyways, this is a really important lesson. I know all of a sudden we're not going into trade setups, but this is a really important lesson. Moving averages are supremely useful for telling you when to trade and even when not to trade. They're very useful to tell you if you're in a trending market or a consolidating market. So they're important because they help you choose the right trends, and they suggest decent entries, and you could even use them for stop placements and all kinds of very interesting things. Like when I look at the 200 EMA and say, okay, I'm no longer a bull, I'm neutral. I mean, that's useful information. And then I adjust my expectations accordingly, or I change my strategy. on that time frame, right? Good. But where it's very often missed is, like I said, these are lagging. So are we touching the 55 EMA right now? No. We're a good country mile from that thing on a daily chart, right? We're like a whole day away from that thing. Let me ask you something. If it turned red today, okay, it's only one candle. I'm not even suggesting a lower low. So we have an inside day. And then another day occurs, okay? The oscillator is going to be way up here. And where's the 55 EMA? It's moving. And it'll probably look more like it'll drop a little bit. And you'll say to yourself, man, why didn't I sell that? Because now you're looking at it and we're a country mile away. On Tuesday, you're going to say, man, I can't believe I missed that. It's dropped like 300 pips and I just didn't see it. Well, you didn't see it because it hadn't happened yet. So you need to take that into consideration the same way that you have to aim in front of the deer if you want to eat. Anybody hungry for pips? Nice thing is you can exchange pips for any currency pair that you wish, and then or for any currency you wish, and then go to any restaurant and say, give me the food I like now. And they'll say, you give me money. You give them the money, right? Nice. You can have whatever you want. Yeah. All you have to do is hunt for pips. Make the pips pay for it. And that's how the life should work, right? I remember when I first started trading, it was a big deal for me, especially at the time. I wanted to get 2 external monitors so that I could have 3 screens. I thought I was the top dog, man. I'm a real trader now because I got 3 screens, right? But it was important to me before I bought what I wanted. I said to myself, I need to earn it. The business needs to earn it. I need to pay for it with pips. And back then, 3 screens was a lot. Just an LCD screen was new. That's how old this was, right? An LCD screen was a big deal. Well, you have a flat screen, and so I finally paid for them with pips, which was a big, honor. I think it felt good to do what I was supposed to be doing successfully enough. So I exchanged my pips from USD, and then I go buy these screens. And I plug them in, boop, 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 behind the computer, and I crawl out from behind my desk, and I sit in front of it. I expand my charts across all 3 screens for the first time. And you know what I saw? A trade. I kid you not. I'm like, oh, my God, that's a double top. But it from like a long time in history. But it was the first time I saw that much data on a chart. I'm like, wow, boom, sold. Paid for the charts, or paid for the screens. Nice. Very nice. So it's helpful to see these things. It's helpful to plan ahead. So ask yourself now, is the 4-hour 200 EMA a reasonable enough potential reversal zone? Yeah, okay. It's not going to do it in of itself, but it's neutral to me. I'm not so convinced it's going to go straight up anymore, only because the 200 EMA on this time frame. And that is also confirmed, generally speaking, by an oscillator. Now you got to be careful because oscillators in trends will be overbought or oversold because that's what people are doing. But okay, at least it's not down here. All right, so there's two sort of mediocre pieces of information here. But if you saw areas to take profit, it wouldn't be bad. It wouldn't be a bad place, And then you start looking at things on the daily chart. It could go up a little higher and be a good sell zone. It better do it today. But then, if that's the case, then Monday and Tuesday, I'd probably at least on the short term sell it. But that suggests this could go all the way back down to $1.75. So we could reverse the whole trip. Now, hopefully, it's not that bad. If we do come down, this is the gray zone that. No, it just won't let me do it. Down in here would be maybe. This might be interesting. So what I would end up doing on the daily chart is I would fib it, and on the longer term, and then on a shorter term, I would reverse fib my way down. Another way of saying it is I'd be short-term short, and I could have one big trade for 300 pips, or I could have, 5 trades for 50 pips each, depending on if you're spot or swinging and stuff like that. And then up around the other way. When? Well, on the drop. Because now I'm looking at it more as of a trend trade, okay? The big thing we need to do for those that are bullish on the British pound is we need to get through that. Okay? Definitely, right? Before you start getting super confident. Okay, and I wouldn't be super confident for a while, but so how would you mark it? Something like that, maybe? Is that what you're thinking? Come on now. There you go. Where's that last one? Yeah, I got to get to the bottom of that. Okay, hang on. Let me back out again. You are not alone. I'm good with you. I know. Get on with it. I like to be precise. There we go. So, I'd like to see a breakout of that. And we're a long ways from it. So now go back to an hourly chart. Long ways from that. But so we'll see, right? Just plan it out, think about it, so on and so forth. Good morning, Andy. All right. Gold. Any gold bugs? Jitterbug. Jitterbug. No? Okay, we'll skip it. Okay, oil. Yeah, you can see we had a top end oil sell here, which actually worked out for a while, but we knew where the reverse fibs were likely going to be. I thought it would actually come down a little lower, but whatever. So we've busted it out here, and it's still surprising to me. I've been wrong on this since about here. The plans have been to sell, and they have worked out, which is fine. So technically fairly correct, but still still a fair amount of margin of error here because I haven't been wanting it or thinking that it would go higher. Okay, all of this other stuff we nailed on multiple occasions in multiple ways, which is cool. But this pullback was bigger than I thought. Then I thought it would drop, which it did. I didn't see this pullback here, but then we had this old resistance drawn, so we made it very clear, sell oil here. It did drop. It was all good, and it keeps going higher. Meanwhile, we get news like OPEC is increasing production. There's no place to store oil in the United States, so they're putting it on ships and parking it in the Gulf of Mexico. Making peace with Iran so that they can put their oil on the market too. And oh my gosh, there's so much oil. But it keeps going up. So that's that. You could play the same game in the sense that you buy at support and you sell at resistance. Okay. That's all. Just make a decision, because you can see, like, generally speaking, for a while I haven't been that right, but every time we've put up a trade plan, it's been profitable, right? Like, hey man, I've been wrong, but we've made profit every time. So, I mean, to what degree is it wrong? Well, I would have made more money being a bull, but that's it. So, well, my suspicion is that low oil prices was a CIA operation anyways, but we don't need to get into that. That it was phony baloney anyways down here. So, but I don't expect it to go to, $100 a barrel ever I'm like, honestly, the fracking is such a technological revolution that oil prices are going to be quite low for a very long time. And I mean years, maybe decades. Okay, so yeah, lots of questions for Kiwi. One thing we do need to look at, though, today is the flash crash. Let me zoom in. Okay, we can't see it here on a 4-hour. Let's do it on a 15-minute chart, and boom! So that happened today in Germany. So, big move today. I was sleeping, so I can't really comment on it. But lots of things going on, like Greece wants to skip a payment. So anyways, I don't know. It is what it is. Here's the other thing about when you get there's so many ways to think about this. Everybody is long. Okay? Everybody's long, and there's a herd mentality in trading. Now, efficient market theory will tell you that, that doesn't happen, that everyone stays rational. What a dumb theory. What percentage of the market do you think is purely rational all the time? Right. But this is my frustration with academia, right? I'm being taught that the value of the stock is the present value of all future dividend payments. I'm like, are you mentally insane? Stock price is. Don't give me some stupid textbook that the value of a stock is the present value of all future dividend payments? Like, what decade are you in? What company even pays dividends? I'm like, you're insane. Professor. Of course I can't say it. I'd get kicked out. But this is what they teach. It's amazing, right? And that what the market is rational? Oy vey. Well, you don't know the market I know. Right? So anyways, a lot of people are long for very, logical reasons and stuff, but they're not rational. And like I said, very often people pile into the trade late because they're not smart. There's no nice way of saying it. They're dumb. They finally figured it out after the DAX is up 40% that it's rising. Maybe they should get in. But it's over now. Right? I mean, come on. Why didn't you get in at the beginning of quantitative easing? It's so simple. So now that it's up 40%, hey, let's buy the DAX. Well, okay. And so lots of people get out, but not many people have big stops, right? What if your stop was about here or here? All of a sudden, the vast majority of people, let's say 80% of the people, buy in the last 20% of the trend, right? And the first 20% of the people get 80% of the trend, right? Would you even venture to guess that that's even reasonable? That 20% of the people got in at the beginning of the trend and 80% get in near the end? That, to me, that seems pretty right. And what happens is you get this huge cascading effect because all of a sudden people are getting wiped out. Boom, boom, boom. And a reasonable bit of bad news, just boom, it just takes people out. And it's heavy, and we're kind of reverting back to the mean. Okay, but if you were rational here, you would look for a buying opportunity. Okay, but again, the people that bought in here are freaking out and even potentially losing money, right? The people here that bought when quantitative easing was announced, they're just taking profit, and it's part of wiping these guys out. They take profit, and it just wipes everyone out that has stops up here. But this is when you should have been anticipating quantitative easing. So, the smart money is in here, guys. The guys that are just doing what is basic, simple, logical, quantitative easing's announced, buy the DAX. I mean, that's it. That's it. That's the whole chapter. Quantitative easing's designed to increase asset prices. All right, buy the DAX. Done. Okay. But then who buys up here? The smart money? The logical money? Right? No, man. People are getting wiped out here. So we get these little mini flash crashes because 80% of the market is up in here. This is 80% of the market. Right? This is 15% of the market in here, and 5% of the market's down in here because they anticipated quantitative easing. Now, how could you possibly anticipate quantitative easing? Well, let's see. Draghi didn't have the legal authority, so he had to go to the courts and ask the German courts for the authority for quantitative easing. I mean, it was reported, it was talked about. I mean, it took the guy like 3 months to get the legal authority to even do it. Well, that means somebody was buying in here in December, January. Finally, he gets the authority in February, March, which is this area, and now people are buying because they're like, hey, the DAX is up a lot, man. It's up like 40%. Maybe I should buy now. Right. Good job. So now, you get this big old correction because all these guys are getting stopped out and these guys are taking profit, and it's all good for professionals. The question is, when should you buy in if you were to act logically now? Right? Well, that's the next great question, right? So I think there clearly is support in here. And if that doesn't hold, gets complicated, right? So that's a 382. So, yeah, what, 618? So put the other one here, and maybe that's the new normal for a while. And what we need to do, and this is what tends to happen, and this is more behavioral than it is efficient market, we need to wipe out these 80% and have them just give up. So here's what this would be great. It sits here all summer, right? All summer. Everyone's on vacation. It drops down here, and people freak out, and then it goes wham, 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 wham. And these guys get back in. Okay? That's a harder one to predict, but, I think if you wanted to look for an opportunity, that would be really good. It would suggest that we would come back to about here. It doesn't suggest straight up like a rocket ship because you can get one of these things, right? Get it? Cool. So that's a BHAG, right? Big, hairy, audacious goal. That's a big picture thing, and a lot of it is wing and a prayer, but I think you can agree that could possibly be support. Okay? Right? How many people? Let's go through it very quickly. Give me fast answers. Is that support? We don't know if it'll hold, but is it support? Okay. Quite a few people answer. Okay, good. Do you sell at support? Okay. So you can't sell there. So you could look for at least a short-term buy. Because if you were going to short, you should have shorted like a lot sooner, right? So the only possible scenario for you, as far as potential, is maybe potentially buy it. And why wouldn't you buy it? Look at this. Is Draghi done with quantitative easing? No. Has quantitative easing failed? No. Right? Did the girl in the tight pants, change everything at the ECB? Well, maybe. Hey, man, crazy women have done a lot, right? Wow. So, so buy the dip, yo, if I can be so candid, right? And if that doesn't hold, how about this one? Okay, that's all. Because you can't sell, so you might as well look to buy. And I don't feel that stupid buying an uptrend. Okay? And then, of course, a real terrible thing would be to have it reset off of this, but that just proves my next point. So now you see that I got multiple reasons why you buy off there, because that's a price action bottom. Also based on the medium swing. Medium swing. Right? This is a 382, this is a 618, and then on the macro swing, it's a 382. So it's all good for me, man. So how about this? Up to here, head and shoulders down through summer, and we buy it here the third week of August. That's my guess, but whatever. Okay. We got some news to snooze, don't we? Don't we have the news to snooze today? Let me check it out. This is a website I like to use. It's called fxstreet.com. Hip, hip, hooray! Hip, hip, hooray! All right, so what do we got going? Okay, coming up in a few minutes, CPI. Okay, CPI is a basket of goods and services, and it's used to measure inflation at the consumer level. Generally speaking, there's no inflation. Okay? But that's going to come out in 9 minutes, according to fxstreet.com/economic-calendar. So let's look at some data. You don't mind if we go fundy, do you? Let's have some fundy. Wang Chungy. Okay, yeah, let's take a look. This is CPI over the last, since 2005. Okay, since 2005, on average, Euro USD moves up 37 pips or down 37 pips, and that's just random, right? If it goes up, it'll go up 37.12 pips. If it goes down, it goes down 37. Amazing, right? For a full-on range of 75 pips over the course of 2 hours after the release of CPI, or since 2005, which is now 10 years. Wow, that I've been using this. Wow, holy smokes. Wow, remember when this was new? I gave a lot of feedback in the design of the software, so it's interesting that it's now been 10 years. Oh, no. Oh, no. Anyways, well, put it differently. You see all these trading events, guys? I was there when it happened. Wow. Yeah. So anyways, on average, this is worth almost 40 pips. Not quite. Man, let's just play it conservatively and say 33. But what has been happening more recently? Well, last data was a dud. Not much happened. But then look at that before, 122, 148, big ranges, right? But check this out. As expected, dollar got strong. I think a lot of this is built in euro, right? Let's go to more normal, right? See how it gets smaller? 89 the month before, 59 the month before, 47 the month before, 43, 37, 32. And we get closer to average because there's a lot of anti-euro stuff going on in here. But there's been some good trades, right? I wouldn't expect 150 pips today. I think, we're consolidating with the euro and all that kind of stuff. But there's a lot going on here in regards to when the Fed will raise interest rates. When. If we get a really good number today, like better than expected, it's going to jump. Or in this case, fall. And people are going to say, all right, maybe June is still on the table. That would be a very interesting scenario. If it misses, I think the dollar will get quite weak because they're going to say it's not June, it's SEP. But let's do the actual result is better than consensus. And it tends to, Euro USD tends to drop a little more, according to this, 39 pips. Okay, if we looked at the average over the, over the last 12 better results, we're looking at, if we're drawing an EMA, it's going to be more than that because historically it was a lot less. So better than expected CPI is going to produce, I would say, more than 50 pips. Okay, weak, and it'll go up 40. So I'm thinking more like if it's a good number, Euro USD will drop 50 because it's going to price in a lot two different things: anti-Euroism and pro-dollarism. Okay, make sense so far? Okay, this shows that about a half an hour after CPI, the market spiked after the news. So I must have closed it. So there might be something else on the calendar that moves the market. So be careful there. This is what happened last time. You can see euro dollar dropped as much as 45 pips, came back, made a beautiful roll reversal, and dropped for a second chance. Okay? So there's many ways of trading this. On the open of the news, on the first retracement, okay, on the roll reversal. By roll reversal, I mean this. Okay, this is old support. That should be resistance. Oh, you can't see that. Well, anyways. Okay, and what currency pairs should you trade? Think about it. I'll show you the history of this report. The trend seems to be below expectations, which I think would be dollar negative. Okay, so the risk is to the downside. We're hoping for a good number. What you should be trading is this. Oops. Oh, no, that was it. Hang on now. Okay, best performer last month was pound Swissy. Boo. I used to like trading pissy anyways, pound Swissy. Swissy yen, wow. Well, I'm going to take the Swissy stuff out. All right. What else was good to trade? More Swissy. Euro yen looked pretty good. You know, that more than the 50 pips, I'm guessing. Euro CAD, lots of euro stuff. Pound yen, pound dollar. And where's our friend euro dollar? Euro dollar was okay. Oh, look at that, 52 pips. That was the magical. So, yeah, that's what I thought. Based on historical averages, if we get a better than expected number, I think it'll move about 50 pips is what I said. Well, last time it moved 52, apparently. You could trade almost the same thing and get a little, well, pound dollar did produce the same thing. One thing that's changed, though, as you've seen by the technical analysis, the sentiment has changed on the British pound. And I don't think the sentiment's changed on the euro. So if we get a weak number on CPI, you probably want to long pound dollar. And if we get a poor number, you probably want to short, or I mean a better than expected number, you probably want to short euro dollar. Got it? Long pound dollar, short euro dollar.
As well as some other Canadian data in just a few seconds. CPI at 0.2% is 1/10 lower than expected. Core at 0.2% is in line with expectation. Year-over-year CPI minus 0.1% is 1/10 lower than expected, but core 1/10 higher than expected at 1.8%. Canada CPI 0.2% is 1/10 lower than expected month-over-month. Year-over-year at 1.2% is 0.2 higher than expected. Core CPI at 0.6% for Canada month-over-month is 0.3 higher than expected. Year-over-year, 2.4%, also 0.3 higher than expected. Retail sales in Canada, 1.7% is higher than 0.5% expected. Next autos at 2.0% higher than 0.7% expected, with backbones revised higher.
All right, you got all that? Okay. Let's go check it out on Euro. By the way, that was brought to you by TradeTheNews.com. Thank you, Trade the News. Okay. Off we go. Areas of risk. Definitely there. All right. Warren threw down some money before the news came out. All right. As long as you had your stop jam to BE. Generally speaking, I'm looking around my screens. I have more than 3 now. Looks like where USD yen is testing 119 from the bottom. Could be a very interesting place if you wanted to short it. Wow, USD CAD ripper strong now. Holy moly. Beautiful pair up here. Dollar reasonably weak. Canadian dollar super ripper, awesome strong. Testing a I think it's a midpoint psych, or is it 21? Yeah, no, breaking through a psych level like a hot knife through butter. Loufle. Good job, Canada. Who's that righty? British pound recovering very nicely. All right, so let's go into the 1 minute. Anyone planning on scalping? Is that a yes? Okay, approximately a 382 Fibonacci retracement. Threw down a binary option because therefore I don't suffer any volatility risk. Now, did you notice I just traded a binary option and it appeared on my MT4 account? Oh, snap, that just happened. Well, in this case, Sandy, I decided to trade with the binary option. Pips are not involved. I'm either right or I'm wrong. And it could go up 100 pips and then drop, and it doesn't matter to me. So it's got a built-in risk management. I don't need a stop loss. It's all built in. Nothing matters now except the time. So my binary expires at 12:45, and it's 12:34. So I got about 11 minutes, and I'm right, as you can see, so far. There's my entry. Everybody see it? Everybody catch that? Any questions? I'm here. I'm here to answer, man. I'm here to help. If you got a question, don't be shy. Right? There's 100 people watching. No, everyone's got it? No questions on binaries, no questions on scalp methodology, just everybody's good, huh? You are not alone. Yeah, Wyatt likes it. All right, cool. Where do you see the bottom for Euro USD? I don't know, 80? Unless you mean today. You need to define your question. Curious about the scalp methodology. Okay, cool, Sandy. Yeah, it's the same method I use to scalp non-farm payrolls. The market dictated the way that its interpretation of the news. The market took off to the downside after the news, right? So what I say to myself in that scenario is, I'm a bear. Oops. I'm a bear. Okay? Fine. That's all that it said. And it's a scalp, so not forever, but just the high volatility event-driven strategy says go in the direction of the response to the new information. That's the part of the only part of efficient market hypotheses that I buy into, and that's that price includes all known information, and when information changes, it automatically prices it in. I agree with that. All right. So anyway, so this got priced in. It said bear to me, at least on the short term, because I got red candles. Now, do bears sell low or do they sell high? Bears sell, but do they sell low or do they sell high? Right. So I say to myself, I'm going to sell a retracement. So my sweet spot, whenever I'm trading, is somewhere between the 382 and 618 Fibonacci retracement. So that's my zone. So I came back and I sold at the 382. That's all. So I sold it on almost a 40% retracement of the move. Okay? And that's why I got this all fibbed up and stuff. That's it. Easy peasy lemon squeezy. I've done that event-driven strategy 109 times during the non-farm payrolls live events that I've been doing for 9 years at FX Street. It's the same one. It's just a volatility strategy. And a high volatility event-driven strategy. So somebody asked, what's the bottom on the Euro USD? And I think maybe what was meant was the trade. Well, we already covered that with empirical data. What did I say? Guys, what did I say was the expected move over the course of 2 hours for Euro USD based on empirical data going back to 2005? Yeah, 50 pips. Thank you, YJ. So that would be my answer, about 50 pips. So that puts us, let's just call it, because it's easy math, right? Let's just call it 108. So 107.50. And that puts us at the 1618. So a 382 to a 1618. Does that make any logical sense? Well, that's actually Fibonacci theory. A 382 predicts a 1618 extension, which is about 50 pips, which historical data shows that when we get a reasonably decent CPI number, that the Euro USD tends to fall approximately 50 pips, which is right about there, which is what the fib suggested. So, you know what? Fine. Easy peasy lemon squeezy. So we only got 5 minutes left in this session. Oh, look at that. First target achieved. First target achieved. Oh my gosh, it's so exciting. I have 4 minutes left before my binary expires. Stays low. So the way that the binary works is you see this green line? If price is below that green line, I get paid 83% more than I invested. Now, it's just any distance. Okay, any distance. So if you're in the cash trade and you're deciding, should you take profit here or should you stay in it and drop and try to catch the extra pips? But what if it comes back up to here Now you're losing 50% of your profit. But maybe this will hold and then it'll drop. But maybe it's going to reverse and go all the way up here. How do you manage the trade, guys? Well, with the binary option, it doesn't matter to me. It doesn't matter. That's the fun part. It could close here, here. It could retrace all the way back and close here. As long as it's below that little green line, I get paid the same amount of money, 83%. Well, that's not bad. Now, what about things like, do you guys ever have slippage during high event, like news releases, right? Do you ever like say, you know, you pull the trigger and it moves 4 pips before it actually puts it in? So you pulled the trigger there, but by the time it entered, it was, you know, but not huge, but it could be 2 or 3, 4 pips, right? I'm not talking about 20 pips. But that's, you know, by the time you pull the trigger and all that kind of stuff, that happens, but not with the binary. Have you ever been in a trade and you moved your stop to plus 10 right before the news came out? And price didn't move much toward you or away from you, it doesn't matter, but all of a sudden you get knocked out. And you say, what? Price never even touched my stop. Why am I out? And you find out the spread widened to plus 12 for 1 second. And because the bid-ask spread is what takes you out, all of a sudden you're like, the spread went boop, boop, and knocked you out. And you're like, what? Right? Trade up, please, right? Doesn't happen with binary options. Have you ever been in a trade and you sold and then it went wham, takes you out, you lose 25 pips, and then for no logical reason it did this? Has that ever happened to you? Yeah, it doesn't happen with binaries. So 16 seconds left, 14, 13, 12. Here's my trade, short Euro USD. There's my position, an empty 4. Just a little scalp. I know it's only a 1-to-1. Boom. But I made money. Watch the trade, watch the trade. I'm already out here. It's just got to go to the MT4 server. You are not alone. Guess I can go to expired positions while it's doing that. And so here's my trading week. Okay, there, the trade's gone. Okay, here's my trading week with binaries. Oh, it hasn't updated yet. Come on now. Oops. Okay, there it is. All right. So I won, 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 I lost, I won, I won. Yay! Yay! So I think 10 out of 12 or something like that. And I missed a few yesterday because we talked about it. And then while I was talking about it, I missed the entry, but I set it up on 4 other trades. So anyways. All right, I got to jump, babe. I love you. But I got to go, yo. Thank you to FX Street. Really appreciate working with FX Street for all these years and many more to come. And I invite you to come and attend more of these events. Just go to tradersway.com, open up a demo account, and you can join all our webinars and stuff like that. It's free. You don't get spammed and all that kind of stuff. It's all good. But every single day, 7:30 in the morning, either at tradersway.com or at fxstreet.com, I do these events for you. And you're welcome to join us. And if I didn't cover anything today that you would like to have covered next time, just let me know. Write it down. Make sure you ask. And that's that. So I hope you have a wonderful weekend. Thank you for the investment of your time. I know your time isn't free. Neither is mine, but I'm here for you. It's my way of, giving back to the community. If you want to send me a box of Cuban cigars, I'm okay with that. I like Solomon shapes. A 5x55 torpedo, Monte Cristo #2, not so bad. Cohiba Bay hikes. Yeah, can't go wrong with that. Wink, wink, nudge, nudge. Aye. Yeah, I'm a big red wine fan. If you must know, my preference is a dry Rhone red. Oh my gosh! Well, if you got good tequila, if you have good tequila, man, tequila. I like tequila with an ice cube. If you got that kind of, if you can